Are you ready for disaster? The connection between the New York fire and the crypto crash. In recent days, two major events have sent shockwaves across the world: the catastrophic fire in New York City and the massive collapse of the crypto market. But have you ever wondered how these two seemingly unrelated events could be connected? What if I told you that the chaos in New York and the crypto crash might be more intertwined than you think? In this video, we're going to dive deep into the unexpected connection between these two disasters and explore what it means for our future. Stay tuned, because this is not your typical news report. The New York fire. A wake-up call. Let's first talk about the New York fire. For those who aren't aware, a devastating fire recently broke out in one of the city's most iconic buildings. The blaze spread rapidly, causing widespread damage, panic, and ultimately loss of life. This tragedy has not only affected the people directly involved, but it has also rattled the global sense of security, especially in one of the world's most populous and economically significant cities. So, what does this fire have to do with crypto? At first glance, it may seem like these events are completely disconnected, but stay with me here. In the aftermath of major disasters like fires, earthquakes, or even wars, the market often reacts in unpredictable ways. The volatility that follows these tragedies can have a massive ripple effect, impacting everything from stocks to commodities and, of course, cryptocurrencies. The immediate aftermath. Fear and uncertainty after the fire in New York, like many other global disasters. Fear and uncertainty grip the public. People panic, and in a society increasingly dependent on digital assets, this fear didn't just affect physical markets. It hit the crypto space hard. As the fire spread through New York, media coverage intensified, and investors pulled back from the high-risk environment of cryptocurrencies, causing a massive sell-off. In times of crisis, people tend to retreat to traditional forms of wealth preservation, like gold or even cash, instead of risking their money in the unstable world of crypto. The ripple effect. Investors fleeing crypto. The effects were swift. Within hours, Bitcoin, Ethereum, and several other major cryptocurrencies saw their values plummet. What we witnessed in the immediate aftermath was a massive loss in market value. Panic spread just like the fire itself, only this time it was digital flames. As one of the largest financial centers in the world was burning, the digital financial markets began to burn as well. Investors who had been riding high on the bullish momentum of crypto saw their portfolios take an alarming dive, all because of a global event that, on the surface, had nothing to do with digital currency. But there's more to the story. The underlying link. A fragile global system. This tragic coincidence shines a light on the fragility of our global economic system. Here's where things get interesting. The crypto market is often seen as the Wild West of investing. It's unregulated, volatile, and attracts those willing to gamble on the next big thing. But it also reflects the instability and risk inherent in our interconnected world. The New York fire, while a tragedy in its own right, serves as a reminder that we are living in a time of constant flux and change. Global economies are more intertwined than ever, and a crisis in one area can lead to devastating consequences in another. For example, the fire and the subsequent panic in New York created a perfect storm for crypto to crash. Investors, who typically view cryptocurrencies as an alternative to traditional finance, pulled back to avoid potential financial losses. The fear generated by the fire spread through the financial world, creating a snowball effect. But here's where it gets even more fascinating. This wasn't just a random disaster. This was a wake-up call for investors who had been too reliant on speculative investments like crypto and global events. A dangerous dance. Cryptocurrency, despite its revolutionary potential, is highly sensitive to global events. Geopolitical instability, natural disasters, and economic downturns all have a direct impact on the crypto market. In times of crisis, people tend to flock to what they know best: fiat currencies, gold, or other traditional assets. Crypto, as we've seen time and time again, is not immune to these shifts. And while some may argue that cryptocurrency is the future of finance, these kinds of events expose the weaknesses in the system. Imagine this. A major disaster hits a country, and the local economy crumbles. People panic, withdraw their funds from the banks, and convert their assets into cryptocurrency. Sounds like a perfect storm for Bitcoin, right? But here's the problem. If the global economy is already fragile, like we saw after the New York fire, A crisis in one country can trigger a domino effect that sends shockwaves through the crypto market. Crypto, in this sense, is not the safe haven it's sometimes marketed to be. The future. Is crypto really the safe bet? Now, the big question is, what does the future hold for cryptocurrency in times of disaster? Will it continue to serve as a hedge against inflation and economic collapse? Or will it prove to be just as vulnerable as the traditional markets? The recent events in New York have certainly raised some questions about the true stability of digital currencies. While crypto has the potential to revolutionize finance, its sensitivity to global crises shows that it's far from being a foolproof investment. The reality is that no investment, whether traditional or digital, is entirely immune to the unpredictable forces of nature and humanity. What can you do? In conclusion, it's clear that the connection between the New York fire and the crypto crash isn't just about a tragic event and a market downer. It's about the fragility of our financial systems and how a single spark, whether literal or metaphorical, can send everything into a tailspin. So, what can you do to protect yourself? First, stay informed. Follow the news, understand global events, and how they could affect your investments. Second, diversify your portfolio. Don't put all your eggs in one basket, especially in volatile markets like crypto. And finally, always be prepared for the unexpected. As we've seen, disaster can strike at any time, and the markets often react in ways we can't predict. But most importantly, remember this. Are you ready for disaster?